It is one thing to invest in mutual funds, but it's another thing to choose the right mutual funds for yourself based on your own investment goals. Yes, mutual funds are a good way to start off your investment journey, especially for beginners, but not all mutual funds are the same, and it is important that you assess these mutual funds before putting your money in them. In this video, I'm going to walk you through a real mutual funds fact sheet and show you the key things you need to look out for so you can make smarter investment decisions. The first thing you must always look out for in a mutual fund is the fund's objective or the fund's goal. So I have in front of me a fund fact sheet from a Nigerian provider, and in the objective section, the fund's objective is to provide sustainable, attractive returns over the long term. So this already tells you that this fund is long-term focused and they are investing in assets that they hope will yield returns in the long term. So if you're an investor hoping for short-term returns or you have a short-term focus, then this fund is not for you. And there are also different kinds of investment objectives that a fund can have. It could be capital appreciation, it could be regular returns in the form of dividends or interest. And if you are also someone who is picky or you have preferences on the kinds of stocks or sectors you want to be invested in, let's say for example you are only interested in investing in ESG sectors, then a fund's objective will let you know if these your personal investment goals aligns with that of the fund and vice versa. The next important thing you need to look out for in a fund's fact sheet is the risk profile. This will tell you how risky the assets invested in these mutual funds are so that you can invest according to your risk appetite. Some mutual funds use a scale of 1 to 10, with 1 being the lowest risk and 10 being the highest risk. But based on this example, this fund has used a 5-point scale ranging from conservative to aggressive. Aggressive is like the highest risk, and it's important you know this so that you can invest accordingly. For example, if you are someone who is around the age of 60 years old or you are nearing retirement, then you have no business investing in an aggressive fund. So it's important you check this out and make sure that you are investing according to your risk profile. The next important thing you need to look out for in a fund's mutual fund is the asset allocation. This tells you how the money or the funds in this mutual fund is allocated across different asset classes. From this example, this fund is invested in two asset classes only: 26% in fixed income and 74% in equities. And this very much reflects the fund's objective, which is long-term returns and aggressive risk profile. And you all know that equities are very risky and they also yield higher returns, especially in the long term. So a fund which has an aggressive risk profile is expected to have more of equities in its portfolio than any other asset class. Then we also have the equity sector allocation. So this helps you see the different sectors this equity has been invested in. And if you are someone who is very picky or you prefer not to invest in certain sectors like oil and gas or brewing, this information is very good for you because it will let you know if this fund is good for your portfolio or not. The next important thing you need to look out for in a fund's fact sheet are the fees and expense ratios, because these will be deducted from your returns before you get them. As a standard, all mutual funds have a management fee which usually ranges between 1 to 2%. In this example, the management fee here is 1%. However, funds also have other fees and expense ratios which may or may not be stated in the fund's fact sheet. For example, in this case, it is only the management fee that was stated. So you need to find out more, or you need to do your research and find out all the applicable fees on that mutual fund before investing in the mutual fund, because even a 0.5% fee can make a huge difference on your portfolio. And if this has not been stated on the fund fact sheet, you can email or request from the fund manager to send you a list of all applicable fees before investing in the mutual fund. The next important thing you need to check in a fund fact sheet is the performance history. So this will tell you how well this fund has performed over the years, and it's usually placed side by side with the benchmark. So the benchmark or the index is the target return that the fund manager has hoped to attain for this fund. So this will let you know whether the fund manager has met the expectations, whether the fund manager exceeded expectations or even performed below expectations. And also you need to check the consistency of this performance over the years. But you have to bear in mind that the fact that the fund performed great in the past does not mean that the fund will perform or yield positive returns in the future. The next important section you might want to check in a fund fact sheet is the commentary. This basically summarizes key market events that might have influenced the fund's performance in the period, and it could be monetary policies, fiscal policies, or even a general economic change. For example, last year, a lot of Nigerian fixed income dollar funds performed better than expected, and this was because last year the US Fed cut interest rates a couple of times, so the fixed income dollar funds performed better than expected. So these fund managers would usually include the commentary session so that you can assess for yourself what influenced the performance for the period before making your own decisions. There are other important things to assess when choosing a mutual fund to invest in, but these are the key ones. Don't forget to save this video for future reference. Please like and share. Follow for more finance tips, and I'll see you in my next video.